Thanks for joining us today. My name is Randy Senzig. I'm the founder and the CEO of the LANIS Group, LLC, and we're proud to demonstrate to you today the LANIS Tier 1 product. It is the most efficient pre-qualification and compliance solution on the market today. And I'm pleased to announce that we've actually been an endorsed vendor of the National Association of Mortgage Brokers. Today I'm going to give you an actual demonstration of the system. It's going to be pretty high level. If you want to know more, click on the button and request a specific one-on-one demo, and then we can answer any questions that you might have. Just to let you know, we do all of the agency loans, Fannie, Freddie, FHA, VA, USDA. We do fix and flip. We do hard money loans. We do small commercial and non-QM. And we all know that the non-QM loans are rising. And there's some interesting things there as far as pricing them out and how you use them. And you can compare all of those loans in a side-by-side comparison, as in 5 loans side by side with a complete financial analysis. So I'm just going to walk you through a couple of the screens here. We've built in a lot of training tips. And those training tips, for example, are these little blue round circles with a question mark in it. And it'll actually give you hints on what to do, what steps to take on a particular cell, and also if there is a guideline, for example, or something that you're out of compliance, it will actually remind you to take a look at that and pay special attention to it. As you can see here, we always want to gather the most important information, including the cell phone. And by the way, these are not real people or real streets, as you can see. But it is important to find out the base information. If you need to check and get market value, click here. If you want to look up a property profile, you can go here and take a look at it as well. Always remember to save your subpages. Navigation is really simple. There really isn't a training program, although we do have some training materials. It's basically, if you see a button, go right. If you have a drop down, another string of buttons, go right. This one here with all the applicant information. This here is all about your subject property. Pardon me. And different types of properties. These are right out of the Fannie Mae, Freddie Mac. If you're using an LOS today, this information is all in there. It'll do your calculations for you. So if you know what the HOE is and it's quarterly, some are monthly, some are annually, it'll factor them all in so that your debt to income ratio is the most accurate. We've also built some of the fields with a to be determined, and that's just to alert you that you need to come back and take a look at some specific thing. For example, in a trust. Some lenders are trust friendly, others are not, so you need to understand that one up front. But this is just a reminder question, and there is a training tip there for you. Occupancy, again, is very important as well. Here is where we configure our payoff. This happens to be a refinance transaction. So we're paying off a first and a second. We've got the monthly payments in there. Existing mortgage insurance, for example, if it's FHA, it'll remind you to, and also calculate those numbers into your payoff demand for you. Object of the exercise here is that you do not have to pick up a calculator. Quite frankly, on those HP calculators, I haven't used one probably in 12 years, and I don't know that I even remember how to figure out a monthly payment on it, because I use this tool, this application, to do all of my loans. One thing to understand is that the industry average is about 68% pull-through, 68% of loans submitted to close. I also own a mortgage company, and that's where we tested this product, and we average more than 95% pull-through of all of our loans. We actually even had a vice president come in from one of the leading lenders and wanted to know why my pull-through was so much better than everybody else that, and the loan officers that they work with. It's a wholesale lender. And when she pulled out my report card, I was 100% pull-through for 16 months. Think about what that's going to do to your pocketbook. Think about what that's going to do with your relationship with your realtors when you're trying to close on time. Very, very important. For an investment property, we actually have built in calculators in here to help understand what the reserve requirement is going to be based on the property type. Also, if, for example, if the if it was reported on a tax return, we've actually built in the next screen here is a Schedule E calculator. We've made it really easy to use because you go to Schedule E, line 21, and you put in your information. It'll do all the math for you to see if you're profitable or if you have a loss on a per property. And it'll also tell you what the net income or loss is for all properties. Debt to income ratio. We have a number of tools in here. For example, you can, in this particular situation here, it happens to be an auto loan. It's a truck. You've got 9 months left of your payment. And what does it tell you? If you've got 10 payments or less, you can omit it from the debt to income ratio. And here, pardon me, in here, it'll display what your debt to income ratio is per the 5 loans and also calculate for you the full, front end and back end. This right here displays the back end because, as we know, many of the programs will cut off, 45%. Some will cut off at 50. Jumbo loans, for example, may cut off at 41%. Just depends upon your lender. Now, the other thing that you can do here is just by clicking these little drop-down boxes, answer the questions, yes, yes. Now I actually have 5 different loans here, and I can manipulate all the payoffs are included into the DTI or admit it, and it'll give me my real-time debt to income ratio. For income, what's interesting is there are many, many different income programs. Some people know annual, some people know monthly. Sometimes they get 24 checks a year, sometimes they get 26. For professors and teachers, we even do the calculations 9, 10, 11, 12 months, okay? So you're dealing with the actual income over a monthly period, and obviously that's the way you calculate your debt to income ratio. Bonuses and commissions, you need to have it for a 2-year average. Our system actually does the 2-year average. For reserves, very important, for example, with a retirement fund, 60%, it automatically does it for a Fannie Mae type of, or Freddie Mac type of loan. But if you're, for example, doing an FHA loan, it's going to factor in 70%. Little things like that that help you understand completely what your reserves are. And for example, if you had an additional property, okay, it'll calculate how much in the way you need per property, how many months, and what the percentage is based on the number of properties owned, so that you have an absolute accurate. And that's one of the things, by the way, this software is going to do for you. It's going to make you so accurate on your numbers that your clients are really going to be impressed. All right, here, for example, we have 5 different loans side by side. Now, for example, if all loans were the same, you just click yes, and then you only fill out this one, it'll do all the rest of them for you. I just put this in here so you can see that we do have a full range of 5 loans. Now, for pricing things out, again, 5 loans, we always start with the lowest interest rate, and we work our way up. The reason being is no points, no fees, always loan 5. Showing the client what it means to actually buy down the rate is absolutely amazing, and we'll show you that on our summary sheet here in just a few minutes. But to help you out, you have a choice of lender paid or borrower paid, display your fee, not display. I always display my fee. I've only changed it 3 times in 20 years. The clients love it because I'm transparent, and they look at it and they go, the other people won't tell me how much they're making. They always say that the lender pays my fee. We disclose it. We feel that that's being transparent, and it adds to our integrity so that when someone's talking to us, they know that we are ethical, transparent, our integrity is beyond reproach. In this situation here, again, because you might be determining from, say, a number of properties owned, which one is actually the best property to refinance. Well, in this particular situation, if it was a condominium, then it'll ask you for your HOA fees again. Here in California, for example, we have Mello-Roos. Mello-Roos is a fee that looks like a property tax, but it's really a charge. But the tax collector actually picks that up. And here, for example, you can do principal and interest or interest only. Really important because sometimes those loans come back where they're 30-year loans with 10-year interest only and a 20-year fully amortized payment, and that's what you qualify on. Well, guess what? We do that as well. Balloon payments and prepayment penalties. Very important when you're dealing with a fix and flip or construction loan, and also in some non-QM loans. Pardon me. Our LE price engine option. You know, it's really important that you actually understand what all the different add-on fees are. So we built those in here. So just to remind you to make sure that you know what your fees are. Okay, this happens to be like a half a point add-on for the FICO and LTV adjustment. We got cash out because we're paying off a second. It was a non-purchase money second. And then our broker fee down here. Now, when you go over to and you can do this for all 5 loans. And if, for example, if you're doing borrower paid, it'll actually figure out for you if you have too much credit based on the interest rate. Because remember that on borrower paid, the lender credit can only be used to pay for everything, but it cannot be used to be paid, pardon me, it cannot be used to pay the origination charges. So our system's going to tell you if you've got too much credit. Now, loan configurator. We've made this so easy, and again, there's 5 of them here. Some people, you know, we call it equity remaining, meaning equity remaining could be 20%. Some people want to put money down to buy down the loan amount, and some people just have a fixed loan amount in their mind. They don't want to go any more than that. Well, you can do this on with our calculators here. Also, for example, if you have seconds, whether you subordinate them or not, if they're fixed rate, it'll come up with a calculator for you. If it's a variable rate, some variable rate loans have payment shock. We automatically factor that in to the debt to income ratio as well. And here, for example, if you want, you can put in what the maximum cash out is, and it will tell you if you're over or if you have enough loan amount. For example, in our loan calculator, paying off a first, paying off a second, we've got all the closing costs factored in. So there's our loan amount. And if we, just to give you an idea, you know, put an extra $200, it does the math for you that quick. Now we've got $562 left over. You can go and again do that very, very quickly here. Same thing on loan 3, 4, and 5. And essentially at that point you're done. Key points here. Let's say, for example, your debt to income ratio is too high. Well, it'll take you back to your debt page and where you can manipulate what you're going to pay off or what can be admitted. All right, very, very important stuff. The other thing it'll do is give you the annual percentage rate, you know, what your final loan to value is, what your origination charge is. Another key factor here for origination is if you're out of compliance. Origination, if you're at 2.75 to 2.99, it'll turn yellow on you. 3% or more, because 3% is the cap, it'll turn red. And it does factor in some of the escrow fees because that's the way the system works, okay? Now, over here with the closing cost estimate, what we've done here is we've built it out identical to page 2 of the loan estimate, so you can factor all these things in. And with these drop-down boxes, everything's in alphabetical order for all the different areas, and you simply can plug in your description and your pricing. It does the math for you automatically. If you have 2 different title companies, for example, you may need to put in a sub-escrow fee or another wire fee. Remember, there's a compliance issue here, and it's 10%. Up here, you know, 0% tolerance. Origination, 0% tolerance. Another thing that we've added in here for trust deeds, if you have a grant deed in and out of a trust, you know, you need to have those factored in. In California, we have an affordable housing recording fee on all refinances, and it could be a maximum of $225 added on to the escrow fees. Okay. Prepaid interest, some of these charges here, some lenders use $365, some use $360. To be accurate, you know, find out what your lender is calculating them on, and it'll do the math for you here. Also, if you're setting up an impound account, we factor this payoff request fee, by the way. We take the base loan amount, we add the current monthly principal and interest payment, add $100. That way we know we've got enough loan amount for the new loan so that we don't run short. We don't have to do a change of circumstance. We're trying to eliminate all those things, those gotchas that come up during a transaction. We get them all out of the way first. Now, down here, some people have asked the question, well, my mortgage is X amount of dollars, but the loan amount is so much higher. Well, maybe you're paying off debt, So we've actually factored that in so that it just eliminates confusion. Now, the fun part, this is really the fun part, is the summary sheet. The summary sheet, remember I said 5 loans side by side? Well, here it is. And you can brand it, all right, to your company logo. Have all your contact information on it. You want to make sure that the clients can give you a call back. That's most important. Some of the basic summary things are up here. Here's your calculation again for your payoff, $2,924. But most importantly here, you can have a different variety of lenders in here that you're competing, going side by side, who's got the better rate for the day. Again, what we're paying off, your closing costs. I love this one. Higher the closing costs, the lower the interest rate. Okay? So we're at 2.375 and we go all the way up here to 2.875. Again, lower closing cost, higher the interest rate. You're going to pay more for that loan over time. I'm going to show you the calculation that gives you that right off the bat. Here's your debt to income ratio, top end, bottom end. This one here, for example, is a 41.8% net tangible benefit to the borrower. That's outstanding. So here's the new payment, all right, based on the 2.375, what their existing payment is, what their saving is. Now think about this, $803 a month savings. Over here, it's $694 a month. And by the way, I don't sell rate, okay? Never have, don't need to. And the reason being is that when I present this 2-page financial analysis, the clients absolutely understand that this is so much better. They can trust these numbers. Remember, it's math. There's only one right answer. But this is so much better than sending an email with, here's your basic closing costs and so on and so on. And then all of a sudden you got surprises when the first loan estimate comes out. We don't do that, okay? And it just is instant credibility to yourself, and your borrowers are going to love your transparency. But look at this, number of months for closing costs. It's 20.32 months. This one over here has got 16 months. These are all great loans, all great savings. But when you think about it, here's your cash flow per year. And by the way, you can go in and you can adjust these however you like. And it also adjusts what we call the cost of money over time. Cost of money over time means it's the monthly savings times, for example, 120 months, 10 years, minus the closing costs. So it's a real number. So when you show this to the client, this is a real net number. That benefits them. Which is the best one? Well, this one's got the best return on investment over a 15-year period if they're planning on staying in the home. $128,000 is their net number. But look at this again. Here's a side-by-side comparison. This is right off of the loan estimate. $59,989. That's how much principal they paid down with the lower interest rate versus the higher interest rate with the lower fees. So is buying down the interest rate better for that longer term investor? Absolutely. So I send this out to a client. They'll come back and send me an email, or they'll send this back with a signature, okay, and which loan that they've selected. Let's say, for example, they select loan 1. Okay, they put in the date and what the time. And now, believe it or not, our 3-day clock starts when we need to issue a formal loan estimate. Reason being, there's 6 items. Major one is what the loan amount is. Most loan officers think that they know what the loan amount is because they're only offering them one loan. maybe 2. Maybe their system doesn't even give them 2. They have to manually calculate it. You got 5. And by the way, on an initial interview, 7 to 15 minutes, and you're emailing a PDF over to the client. They can take a look at the numbers. You can talk with them, talk it through, answer any of their questions. It's all black and white. It's all right here. But the best thing is the borrower makes the selection for which loan they want. That puts them in power. So loan officer isn't telling them this is the best I can do. Here's 5 loans. You pick. They pick loan 1. Now we issue a formal loan estimate. You know, we right now, this is understanding, this is a financial analysis tool. But we do have a loan estimate. Okay? And here it is. We actually have a little bit more detail in here. Okay? Normally this is just a bottom line number over here. Well, we put it in there so that you know what this number is. That way it answers all their questions right up front. Also, you know, if it's escrow. So it looks like a loan estimate, but it's more detailed than a loan estimate. The other thing we do, and again, remember, and this is where you add amazing credibility, amazing transparency for you, and your borrowers are going to love you for it. Lender paid, okay? There's my fee right there. There's my fee on this particular loan. It's off to the side because the lender is actually paying me. All right? They're paying me my fee. There's my underwriting fee, all the rest of the fees that we showed you on the other screen. Here's the beautiful thing. You tell the client when the formal loan estimate comes out, this number will not be there because the only time it shows up is on the closing disclosure off to the side with in brackets a little L which says the lender is paying for it. Now think about it. They get surprised by that number. They may not be real happy. But you're telling the client, there's my fee. By the way, as a broker, lender paid compensation, it's illegal for me to show you that number. But on a financial analysis tool, I can. I'm absolutely 100% compliant doing that. But the credibility that you establish with your borrower is going to be huge. Okay? Think about that. You're changing the game. You're changing the way this industry works and the way loan officers present. I've gone up against presentation softwares. I've never lost. They may be able to get you the loan because with fancy graphs and this and analysis and so on, but our system is going to tell you if you are actually compliant and if you have enough reserves, if your debt to income ratio is okay, your net tangible benefit is above 5% because that's the benchmark. So you think about it, this is the best, most efficient, the fastest, most compliant financial analysis tool on the market today. You will win business. You will save time, a lot of time. My brother had 16 loan officers working for him. And he said to me, he says, Randy, he says, what you've created here is going to save each loan officer 8 to 12 hours a week or more. So think about it. Now, if you want to learn more, if you want to do a one-on-one demonstration, click the button, request a demo. It'll schedule it automatically, and we can talk some more. Thanks for stopping by today. Look forward to talking with you. Looking forward to actually helping you get more business faster. That's going to close. Thanks again for stopping by, and we look forward to working with you. Click the demo button below and get a one-on-one demo, or simply go to www.golanis, and that's LANIS.com, and schedule your demonstration. We think that you'll be amazed. We've only shown you just a few basic functions and features of our system. There is so much more. Just to give you an idea, there's over 700 mathematical calculations in our systems. We believe you will really enjoy working with this application. Best of luck to you. Pardon me.